So if we hit the trades, you can clearly see we are in the monies. So I don't know if what you're doing, if you're not making money right now, I don't know what to tell you. And get into this market, yeah, we're gonna get that back. So I get asked this question all the time. What strategies are you using? What indicators are you using? When do you know when to get in, when to get out, and how long to hold? What are you doing to make this money? It's easy. Profitable indicators and also consistency in utilizing 2 to 3 strategies and not deviating from that plan. Stick around. This is what we're going to talk to in this segment. We're going to get into meat potatoes, indicators, strategies that I personally use to make sure I get that bag. So let's do it.
Forever, ever, or never mind. Oh,
Disclaimer alert, I am not a professional trader. I don't claim to be. You are actually getting in your own risk when you invest into anything, let alone Forex market. I'm just a normal guy. I research and study strategies that to me works. I test them out, and if they work, I continue to use them. So whatever it is that you are investing in, do your due diligence, do your homework, and also please test it out before you actually start. Do a demo account. You don't have to use your real money. All right, so let's get into it. We're using the Alligator, 2 moving averages, and the RSI. Alright guys, so we're here at our candle charts here. Before we get to any indicators, I want to talk about the importance of support and resistance lines. Now when you're making these lines here, you got to make sure that there are multiple points crossing. Whatever the resistance, whatever the support line, doesn't matter. When you're doing support and resistance lines, make sure that the lines are actually crossing multiple peaks here. As you can see on the resistance line at the very top of this white line, I am putting in, it's crossing actually 4 peaks, whereas the bottom of the bottom white has crossed 2. So just make sure there's a minimum of 2 or more, otherwise it's not a true support lines. Now, what's good about these lines is it divides the market into planes, and it shows you where the market has been overall, where it's going, and also where it is currently. Now the smaller planes indicated by the smaller lines in betweens, specifically the orange to the white or the orange to the orange, and then the larger plane, the overall, excuse me, is actually indicative of the 2 white lines right here. So this overall will show you the highest of highs and the lowest of lows, and you can find the trend lines here as well. The trend lines will make sure to let you know, hey, this is a seller or a buy. So this is very important that you actually start doing these trend lines, especially if you are brand new, you don't really know how to do charts, or even if you are an avid trader, want to be more specific. This could only be beneficial. It's not hurtful at all. So when you do that, then you can have a better eyesight of where everything is headed, and if there's any big swings here. I've already seen a couple of them, and this is actually from the British pound versus US dollar, and this is one of the 3 pairs that I used over the weekend in the past 3 days to make $1,600, and I started with like $235. And this is one of the things I do before any of my trades. I put in my support and resistance lines. Now on this, it will tell you if the market is actually testing. Now I'm drawing these lines because right now currently is in that top plane, right? So if it peaks through and the whole candle crosses that orange or crosses that other white, then you know it's going to be a good prediction that it might trace all the way back down to the very end of the support line as noted by that white line in the bottom. Now if it doesn't and it traces back up automatically, then I know that it stays in this plane, this top plane up here, and it'll probably hit right back up to that white resistance line. And from there I will actually take a look to see if the candle breaks through and stays true, there's a solid candle, not just a wick, then this is an indicator that it's going to continue to rise. But if not, and this candle goes from blue to red after touching that resistant line, then I know it's going to retrace back down and you can catch profits on the way back down. But the support and resistance lines here are to help you to better understand where the market is moving within these planes. All right, guys, so we are here on our first indicator, one of three. This is actually one of my favorites. This is called the Alligator Indicator, otherwise known as the Williams Alligator. Now, people use this as an indicator and a strategy. So if those of you who do not know anything about this, just a quick, simple Google search, what is the Alligator strategy in Forex, and you can have that down to T. But I want you to focus on the rule of thumb. If the lines are below the candlesticks on any of these charts, that means it is a buy. If the lines are above any of the candlesticks here, that means it is a sell. Okay, so very, very clear on that, very useful, especially when you are looking at your support and resistance lines and seeing where the market has gone. This will actually tell you indicative of if it's projecting to go up, stay up, or if it's a strong sell, or if it's crossing here. Now, if there is a gap separation, like a definitive gap here, as I noted here in this blue arrow line, between the candles and the lines. Now, in this case, it's below it, but there's a definitive gap separation. This is a clear indicator to actually buy. And this is a long-term buy because the market is very much in the buyer's control. So if you held on to the very beginning here, where there was beginnings of showing this huge gap at the very left of your screen, you could have held on and gotten what? That seems like 100 plus pips right there. And vice versa, when it changes down all the way, it went and dropped another almost, it looks like 200. Okay, these actually look like 200 pips. We got to measure those out real quick. But yeah, these are your big play winners, and the Alligator as mixed in and combined with your support and resistance lines will help identify these big trends. Now, you want to hold these trades until the trends change, right? So when you see gap separation from the alligator lines through the candlesticks on a buy or sell, well, you will hold that until it actually changes. Now, one of the changes that you'll see here is when the green line starts crossing the other lines here. Okay, so when you read these definitive changes, they'll spread out and then they'll always come back in. Think about it as a retractable rubber band, right? So when you tract it, it will go stretch out, but eventually it will come back in. And that's exactly what the market does here. And when you take a look at all of this, right, there's definitive gaps in every area, every stage of these markets. And you could definitely cash in on these big payouts here, as you can tell, for both the buys and the sells. You have to really just know when and how to identify these hits. Let's go over that right now. See this little circle right here that I just made? Let me take that big one out. But this little circle right here, this is a key hit indicator right now of when it's going to change. When it's going to change direction, trend, whatever. This is a big definitive change. So it goes both ways for buy and sell. Now, if the green line crosses the red, that's the first indicator of this is going to go up. This is a cross off your list, the check mark that this is indeed gonna go up. Now, when it crosses the blue, that is your definitive true buyer's trend. Now, this is definitely ascending. You need to hold on this until the candle changes, right? So had you done that, check this out, you would have gone all the way up there. That's about 200 pips before it drops back down. And you could have gone out, you know, once it hits that resistance line up top to just cash in, what, almost 200. Let me just calculate this, but it's around 200 before it came out. Or you could have just waited for a brand new seller's candle, right, in that red candle. It still would have made huge gains on that. So when the green line passes both the red and the blue, regardless if it's a sell or a buy, you need to hold this. This is a definitive answer of yes, this is a true buy or a true sell. In this case, this is a true buy, and you hold this till the red candle comes up. And when you do that, this is your big swing play. And again, this is exactly the same for either buy or sell. Now take a look at this sell. It's exactly the same scenario. Before this big drop, right, it crossed the red and the blue, and it just went down another almost 200 pips. So this just goes to show that when you utilize these key indicators at this point, it's your alligator. You can clearly see where the market is going, but also the potential of huge gains, huge drops, huge rises. This is how you do it, and those are the key things to look out for. If it just crosses one line, if the green line crosses just one line, right, one red or one blue, I mean, yeah, it's an indicator that it's going to go a certain way, but you don't really get that definitive answer until it crosses both the red and blue, and it always has to be the green line. So whatever you're looking into, just know, rule of thumb here, back to the rule of thumbs, the green line will state what you are actually doing. Now when it passes the red or the blue, just one of them, then you know, hey, this is an alert, it's going this way, it's a good chance that it's going to go into a huge gain. But when it crosses both lines, again, that's when you know, that's your key indicator and alert that, hey, this is a long-term play. It's going to go down. It's going to go up. And look at that, about 200 pips. Now take that on a standard. What is that? $2,000, right? $2,000, what, in one day, half a day, whatever that is right now. That is the big swing play. You can do that on the alligator. We're coming into the moving averages, which is your indicator number 2. Listen, if you don't know what that is, quick Google search will tell you the textbook definition, but I want you to focus on rule of thumbs, which we'll go over here in a second. First things first, let's add this. Go up to your indicators, click search, and type in moving averages. Now, if you're on TradingView and you're using this platform, it's automatic. There's a 50 and 200. You don't have to manual input. But, however, if you're using something different, because I know we're using all different apps and different charts and different websites, you just have to search for moving averages and make sure you have 2 of them. Set one of them at 50 and one of them at 200. I changed my colors to 2 bright colors so they can differentiate from the other lines and other indicators I already placed on. One I use teal, one I use yellow. It doesn't really matter. Just make sure the most important part is that you set one for 50, which is the closer hugging one to the candles, and the other one is your long-term game, which is your 200 here, represented by my yellow candle, and I'll put that right around here, 200. So you got your 50 and your 200. That's all you need to know as far as manually setting something for this indicator. Now, this is very similar to the alligator, but it's a lot different at the same time. So the similarities are rule of thumbs here. If the candles are above the lines, that is a buyer's market. It's a good indicator that this is a good time to buy. If the candles are below the lines, that means it is a sell. Now, here's a side note. Just using this indicator to predict whether the market's going to go up or down is probably not a good idea. It's got on that alone maybe like a 30-40% accuracy rate. So it's not very good. However, this is actually meant to tell you where the market is currently right now. And there is also some indicators within this indicator, right, alerts and setups that you can utilize to better predict a big swing. Now, when you utilize this and combine it with the alligator that we just went over, it will raise your accuracy through the roof, especially on your big swing. So those of you who are trying to figure out, hey, when do I bet big, or when do I invest big, when do I change my lot size to standard, or whatever it is, this is the time. Now, when you see these little circles that I've outlined here, where the moving average lines actually crosses them, right? These are strong indicators of a switch, right? Whether it's going up for the buy or down for the sell. Here's a really interesting part for the moving averages. If there is a gap separation between the candles and the blue and the yellow, both of them, oh, this is a definitive move, whether it's buy or sell. In this case, this is a definitive buyer's market right here, and it's only going to go up. When there is this much gap separation, very clear, this means that it's going to skyrocket. And this level, this is the buy right here. So on this certain example, it's going to go up. So as you can tell, wow, that's around almost 200 pips right there. So that's a huge gainer. Now, you could have seen that there's plenty of gap spaces all the way back here. So if you really got in at the right time here at the slower end, you could have had such huge, tremendous gains on the uptrend, right? And the same thing goes to the seller side as well. This is a 158 pip rise. On a standard, that's $1,500. That's $1,580 right there you just made within a couple hours on that time frame. I don't know, regardless of what you're using for the 30-minute, hourly, or daily charts. This is the hourly, but I mean, these patterns show up on all those charts, and you can utilize this gap separation technique and alert to whatever time frame that you're looking at on any chart. I really stick to the hour and the 30. I don't really mess around with anything less than that because it's too volatile. But let's take a look at this sell. If you did this properly, when this line crosses the same color, now here's another note for that. Just adding to that, if the 50 MA and the 200 MA cross the same color candles, this is going to be your definitive hold. I repeat, if they cross the same colors, this is your definitive hold. So when the closer one, which is the blue, the 50 moving average crosses the line, that's your alert that, hey, this is going down. But as soon as the yellow crosses that same color line, you hold that. There's no question. You hold that until it goes down and changes the colors, because this is your definitive hold. This is your long-term play. And that's when you hit those home runs, the ball right out of the park. This is your game plan right here. So when you add this to your alligator, right, and you're looking at your support resistance lines, man, they really set you up for huge plays. So I'm just going to type this in right here. The same color candles across both MAs, hold until the trend changes, right? Until the trend changes. So this is what you need to do. I love this method. This is my long-term kind of strategy when I'm thinking, hey, I see this further down the week or a couple days, next 3 days. This is going to go in a certain way. I refer to my moving averages. Not only my long-term play, but also like my hour, my 30-minute candles. I still do the same thing because you can see clear setups, again, in any of those candle charts. But yeah, this is great. If you would have got in here all the way up, man, that's what, 200 pips? So I actually use this same method. Again, we talked about that when we were talking about the alligators, but I use this same method, this indicator. I went in on this trade multiple times for the buy and the sell. And guess what? All these long trends that we were talking about, your boy caught them. So this is exactly how to turn that $200, a couple $100 into $1,600. I mean, there was a time that I was up almost $2,000. So if you really want to know how I'm doing it and how to do it, how to identify, listen, you have to be able to read these indicators and look at these setups and just get in on the right time. And this is how you do it, right? So look at this downtrend. So you hold it until the trend changes. Now when you see this uptrend on buy, everything was pointing up, right? And then when it got mellowed, right in this middle area right here, the trend changed. So when that trend changed, that's when you get out, right? Well, you get out and you can catch this drift down, and then you go back to that strategy. Hey, where's the alligator saying? Is there gap separation? Is the green line passing both the red and the blue? And now look at your moving averages. Hey, it's crossed through the candlesticks. Very important that it crosses through the candlesticks. This is definitive. If it's a red candlestick, it's going to go down. A blue candlestick is going to go up. So at this point, it crossed the red candlesticks. This is your alert. That's going to go down. Hey, let's get into this trade. Now we're in the trade here as identified by this green line right here. This is where you entered the trade. Now you know it's going to go down. You're going to go down, but when do you get out? Okay, so you want to put your TP maybe right around in the middle between this green line and this white line right here. So that's your first take profit. Or what you could do, like I do, is I just sit and watch it with open-ended. Open-ended, don't set my take profit at all, right? You'll set your stop loss, but you don't set your take profit. Why? Because as you can tell, look at that yellow line, the 200 moving average line, passed through the same colored candle, and it went another 100 pips down. So this is how you maximize your profit, but also you identify these key home runs. So now you hold this, right, all the way down to the end, and until it changes your trends. But going back to utilizing this with the other indicator as your alligator, look at the alligator. Look at the alligator. It crossed the red and the blue, right? So that's your first indicator check. The next check is there's a gap separation. That's your another confirmation. And then finally here with the moving average, it crossed through this candle, completely crossed with a gap. Now you know you're in a home run. So this is when you're like, okay, I'm about to get in this trade. Everything checks out. I'm going to maximize my lot. So no more with the micros or minis. I'm going full standard lot, $10 a pips. Or you can do 50, 100, whatever it is your account allows you to do. This is the time that you invest heavy, right? So again, you hold that until you find another indicator. Now, if this never touched that yellow, then you should probably set your take profit somewhere close or exit relatively close to where you are because it could always swing back, right? But when it crosses this, that's your another alert system that you just hit the home run. So that's why I love the moving averages. Alright guys, the last indicator here is your relative strength index, otherwise known as the RSI. Now I want you to pay attention to this bottom graph right here, right below the candle chart. Now this is it pretty much mimics the top half, right? But sometimes it's not very accurate. Now, a lot of people don't like the RSI. Some people love the RSI. And then there's some that utilize it every now and again. It's really at a 30-40% accuracy. So if you're just going to go base your predictions and your strategies just on RSI, I don't recommend it. But it is a great tool to smash these big gains when you utilize it correctly. Now, let's go ahead and talk about it. The things that I want you to look at is the median plane, which I just outlined here, but also when it crosses them, when there's pure gap separation and the lines exit this median plane, whether from the resistance or the support lines. Like look at this resistance, I just made a circle around it, and look at this support line, I just made a circle around it. These, when it goes outside of this average median plane, that means there's going to be huge moves either up or down, because this is what I like to call the spring method or terminology. What goes down must go up, and just like the gravity terminology, what goes up must come down. It's the same aspect to this RSI chart. So if it passes this median plane and there's definitive gaps, man, you're looking for a long trend, either up or down. In this case, this is going to be a downtrend right here. And look how far and how much it went down. It mimicked exactly the very top where you look at your blue and red candlestick charts. Look at how it mimicked. And that was a huge drop gain. And again, when you look down the RSI chart in the very bottom, it was so far above that resistance line. So when you look over here now, if you were to hold that, look how far you could have got. It still rose so far. Now look at this area right here. Now this went all the way down past the support line. So if you look on the RSI chart on the very bottom, I circled on the very bottom how it went, and there's a definitive gap. And now when you look up top and its reflection, it reflects exactly what happened here. Now, not all the time, but for the most part. This is when you have to really pay attention, because if you would have gotten that trade, look at this. Oh my God, what is that? 2, 3, possibly 400 pips? This is your just ginormous hit and runs right here. These are, oh, look at that. It's 223 some odd pips. And it actually went further up. So depending on how you trade, I mean, you could have held that longer, or you could have just got out, in and out, and just collected your bags. And there's plenty of space where it went up. You could have just went on uptrend, then could have made money on downtrend. But overall, look at how high it went. Over 220 pips, 223 pips. That's $2,200. So if you would have done that in one day, hey, some people, many people don't even make that in a month, let alone you in a couple hours or one day, right? So this is why it's very important to look at this. Now, it went all the way up here. You could have even exited out right here before it went back down, but had you stayed all the way up, I mean, you would have just made a killing. Look at this gap separation too, right? This is why you have to utilize this with your other indicators that we talked about, the alligator and the moving average. Look at the separation. There's gap separation, so you know this is a definitive buy, right? Also, when you take a look at this, when it changes colors or changes the trends and you're exiting out, right? You could have exited out and still would have made this 43 pip drop. 43 pip drop. And when you look down below, guess what? Your RSI chart says it's through the roof. It's way above this resistance line, and there's pure gap separation. So what do? Obviously, you look for the opposite end. So if it's going up and this happens, you know it's about to do a big swing down. Look at that, 43 pip. And had you held on to it for a long swing till that RSI line up here went all the way down to that bottom white line, you would have made 181 pip drop. That's $1,800. Now, if you're swinging bigger on your lot size, you know, you're doing $100 or $50, $20, like you could talk about $18,000 right there, right? So on me, I do standard lot size, so $10 per pip. That's $1,810 right there, right? Had you entered. But look at this. When you really break apart, look at the candlesticks, your blue and your whites. You had plenty of time to get in and out of that trade and made a lot of profit. Or if you just would have just played that long-term game, 181 pips right there within that day. All right, so this is why I love utilizing the RSI. All right, now take a look at this current situation right here. You know, you see this gap separation. You know it's coming. It went all the way down, touched this resistance line here on the candle chart, right? And then when you look and go all the way down to your RSI, look how far it went down. So when it goes down that far, man, you better put in a buy. Because look at how much it shot up, right? Another almost 200 pips right there. So you could have caught this and rode it all the way up to the very top of this resistance line right here, and you would have got yourself a great payday, right? And again, you would have held on to that because when you looked at your moving average, you saw their separation, you saw that both lines cross the same colored line, right, which is the blue line, so that you know that this is the definitive buy, and I'm going to hold this until the trend changes. Then you look at your alligator. You saw that the alligator went from the green crossing the red and the blue. And then you looked at the gap separation. So you knew this was a home run, right? So when you combine your RSI, your other two indicators that I was telling you, this is exactly how you can identify when to hold, when to get in on before it just increases drastically, or it makes changes drastically in this chart, right? In this trend. And then also when to get out, your exit strategy, right? When the trend changes at this point, that's when you need to get out, right? You can always set your stop loss and take profit. And according, some people do 50 increments, 100 increments, but on big plays like this, when I'm trying to swing for the home run, I'm watching it, right? I'm watching it. I set my stop loss maybe 25 to 50 beforehand, so that's my risk. And then my take profit, I don't set any of that stuff. I just watch it grow. I don't put a cap on my winnings, right? And when I see that it changes to another candle at this point in time, dude, I'm making money. I don't care. I'm taking the win. You can always move your stop loss too and maximize your profit. But on this situation, when you find yourself about to do a grand slam like this, you don't put a ceiling on your baseball field, man. You don't, because you're gonna slam it out of the park, right? And this is how to do it. You have to identify all these. You have to utilize them together to really get your chances almost at 100%. Now, nothing is ever 100%, but this is damn near close. Right now, with this strategy and from this weekend, just in 3 days, I haven't lost a trade yet. I'm at 100%, right? Does that happen all the time? No, but it can happen. It can definitely happen, and this is how. So focus in on your trades. I love this RSI. You don't just put all your chips in one basket. Combine them together and get your probability up so that you can be profitable. This is exactly how to do it. Alright guys, that was a long one. Thank you. So thankful and grateful for you guys taking your time to watch this video. It's my first in-depth video. It was a long one. I hope that you understood some of the basics here, and I hope that you'll take it, implement it, and also do some follow-up research for that. If you did get value in this video, please help me grow, like, subscribe, and stay tuned for the next one. And until then, remember, the greatest investment you'll ever make is you.